What is going on, everybody? It is What the F Happened, and holy crap, do we have a show for you. All of you are watching our weekly show called What the F Happened, and where we're going to get into the week in review of the markets. We're going to rant, we're going to rave, and we're probably going to argue with some people because, hey, that's the whole point of What the F Happened. So thanks for joining us. We got one hell of a show for you. This is What the F Happened. Thanks for joining us, a weekly review. And today we're going to start this one off with jobs. And somebody had commented, it seems like there's lots of job openings, but nobody's really hiring people. If that's the case, that goes right into this thing. The job creations in the July missed by half. So I'll pull this article up real quick so we can actually see this. But I mean, like, obviously what we're hearing and what's actually happening out there are really two different stories. So it's really difficult to make an assumption as to what's really going on out there. I mean,
well, Chris, you know what? This gentleman or whoever this is that posted it, I might be over my skis saying gentleman versus lady, but I heard that the big, like the corporate places are not hiring, but the mom and pops are. That it's almost like you've got two sets of industry out there. You've got this small mom and pop that want the people and are trying to get things going, where it looks like the big box stores are like still getting in line for the money and the benefits, and or they don't have a game plan. I don't know. Maybe it's that they can't agree to disagree. They can't agree to agree. I mean, they're so bureaucratic with boards and shareholders that I think that a lot of them are kind of stuck in the mud, where it's mom and pops, they know what they need. They need workers. You know, can't get anybody to bring the food out on the table if you don't have them inside of your shop. I mean, it's that simple.
Yeah. Chris, it's right there in front of you too, because how many of you have had poor customer service lately or had no service at a restaurant?
Oh my gosh. They're blaming everything on it.
Bear with
How many
us.
people are getting everything, no matter what it is that's wrong, it's always because of COVID, right?
Yep.
If your food wasn't cooked right, if it took 40 minutes to get it, if they don't have it, it's always whatever it is, it's always that. That's their go-to for why they don't have to serve you. And I don't know, has anybody gone to fast food? I mean, there's nothing fast about fast food anymore. It takes you about 15 minutes to order a meal and have it at your plate. It takes like 20 minutes to get through a Starbucks or a Wendy's or whatever. I mean, it's crazy. I was sitting in the line for Burger King here like a week ago. It was 24 minutes and they were acting like they were doing us a favor. I mean, it was unbelievable.
you know, and I think you're go.
I was going to say, plus with the big corporations, they're tacking on more rules that the employees have to follow.
Oh, the other thing is, has anybody noticed the quantity quality? Like, there was a 8.6 ounce bag of chips that I used to get at the store for like $1.49, right? Now it's a 6.4 ounce bag of chips for $1.49. It's the same bag. It's the same bag, same color, same everything. It just has less. And I noticed like everything is the same price, but everything's gotten smaller. There's less fries. There's less burger. The patty is smaller. The buns are smaller. The sandwich is smaller. There's less ingredients on it. Everyone is like cutting. You know what I mean?
We talked about that a few weeks ago. They call it shrinkflation, and it's going to become more and more. You'll notice it more and more in the coming months.
Yeah, it's insane.
I don't know how they're worried about people stealing from them when there's hardly anything to take anymore. You know, there's hardly anything. It's unbelievable. It's almost like that old Wendy's commercial where it's like, where's the burger? You know, where's the beef?
Some hamburger places give you a lot less beef on a lot of bun.
Where's the beef?
At Wendy's, we serve a hamburger we modestly call a single. And
Yeah, it's getting harder to make dollars, but yet it costs more to buy everything, and then we get less. Like that right there that's a disaster waiting to happen. But it's good for giant business. It's good for corporate profits. So if you're an investor and you're investing, I mean, that could be a good thing. And we're definitely going to get talking about the markets and what all this means. But private companies added 330,000 jobs in July, according to ADP, far short of the 653,000 estimate. Like, what are the markets doing today? Are the markets up or down? I didn't check.
They were down. Futures were down. I don't know what they are now.
Okay, so this definitely should mean that the markets go down. So how many of you think that when they miss estimates on something as big as private company jobs and really just, you know, the jobless problem out there. Like, should this affect the market in a positive or negative way? What do you all think? So
I want to know how it
down.
is. Somebody needs to explain to me how 25% capacity in hotels and then all the hotel stocks are up. How nobody's flying airplanes, but the airplane stocks are up. How they're so limited on seating for food, yet all your food restaurants are up. How come people are buying less goods and services, yet the stock market is above where it was prior to COVID? Yet we still haven't got our act together.
I got an answer for that. Everything.
We all have an answer.
Yeah. Everything's being measured against last year's numbers. So if you're looking at any of the reports that are coming out, they're like, oh, like this is up, retail's up, that's up. Everything's up, measured against what? They're measured against the time frame when the entire world was shut down. And that's all about to end in third and fourth quarter, because then you're going to start seeing numbers that are actually more realistic. You're not going to see this phantom profit or this, what you just said. Airlines are profitable. Profitable against what? Are they profitable against pre-COVID, or are they profitable against the same time last year? Well, when you're comparing earnings in that, typically they're comparing against the prior period, which isn't hard to beat. But eventually this whole makeshift nonsense effing lie is going to end, and everybody that is plowing money into the stock market is going to see that the stock market is a house of cards right now. If you can't see that everything that's going on in the stock market is literally not real, it is literally the biggest house of cards ever, ever, even bigger than 1929. Where 1929, everybody was making money in the stock market. Here's the problem, folks. Listen very closely. It's not hard to make money in the stock market right now. When everything's going up, you can just throw darts. Hell, throw darts at anything and you probably made money. So what, does that make you a great stock trader? Does that make you all of a sudden a day trader where you're going to quit your job? That might be the case, but here's the problem. When it all falls apart, you're going to lose it all, because people think they're so good at what they're doing and they're making all this money in the stocks. They forgot how to actually keep that money. That's the trick. You know what Warren Buffett's really good at? He's good at making money, but he's good at keeping what he made, with a simple strategy of buy low, sell high, and don't lose money. But everybody right now forgot about that sell high. No, just buy. Advisors, put your money in the market. Buy. Buy into the FOMO. It's a trap, folks, and it's going to lead you right off the cliff. You're going to get slaughtered. So you're going to have to really make some decisions and choose. As all this stuff we're seeing, is it real? Is it actually fundamentally sound? Or is it just one giant house of cards? You guys can pick. It's not for me to say. I already chose. I'm out. Like, call me silly. My money's in 20 and 30-year treasury bonds and privatized banking policies. Like, I get people beating me up on a daily basis. I feel like a freaking punching bag every single day. This is what I feel like every time I make a post. I feel like this is what people are doing. They're just uppercut. I get beat up every day. It's my choice, my opinion, and that's all there is to it. But you know what? If I had to go back to 1929 and look at what was going on, the same freaking thing was going on. People are plowing money into the markets blindly without any type of plan. If you don't have a plan on how to exit the market, you're going to lose your money. But hey.
Well, here, what's funny too, guys, is the old adage, right? Buy low and sell high. But that's not what they really mean, right? They mean buy when it is that you find out about the stock, and sell it and never worry, right? Because the stock market's the highest it's ever been. So if your motto is to buy low and sell high, why is your broker not calling you to put your sales tickets in? It's because you're never intended to sell.
They wouldn't make any money.
Yeah, because you won't make any money. Yeah, they will make money when you lose money. They make money when you make money. But when you lose money, even though they're making money, half of it's gone. I thought it was interesting too, Chris, did you see that statistic up a couple weeks ago where it showed that statistically since 1886 till 2020, I think it was May, that the stock market has lost 44.33% every 9.875 years. So this is the first time it's gone longer than 10 years.
Correct.
A couple of times it has. It's averaged 9.875 years. But imagine that it looks like the outcome that people are facing is that they'll lose 40, 50% of their retirement. And they're going to risk a couple points here or there in this volatility for the the chance to lose the lion's share of their retirement. And it just doesn't make sense to me.
I want to be clear about something. I was a high-level financial advisor for a long time, 2003 to 2018, when I retired and sold my practice. And during that period of time, all I can tell you is, as an advisor, so I'm not picking on advisors. If any of you are advisors, you love your advisor, great. But I just want to give it to you from the inside. I was trained to be a very good salesperson. I was trained to sell the products. I was wearing the rosy colored glasses. So even before 2008, even though things didn't look right, we just kept going in, and every consultant that came in said, yeah, it's all good. We're great. It's going to keep going up. So I just kept putting people in the market. And when 2008 and 9 really kicked in, my clients rode the roller coaster all the way down, including myself. And that's because I listened to the consultants, to the higher ups, and not realizing that the higher ups are just there to make more money for the company. So tell your advisors, tell your brokers exactly what they should be telling their clients to keep making us more money. And when it falls apart, tell them, oh, this is what you do to protect that. It's backwards, folks. I don't mean to point or get against advisors, but they are not giving solid advice right now. The sell ticket should be in. If you got an advisor right now that's saying, hey, listen, we should take some of these profits off the table, you got yourself a really good one, and don't ever lose them. Send them thank you cards, send them chocolates, and hell, send their wife roses for that kind of advice, because that's a good advisor. Advisors should get paid to protect your money and make sure you don't lose it all when the whole thing collapses, but that's just not what happens. So shame on them. Shame on the entire damn system. I mean, what the F, man? Steven, what do you got to say?
Chris, look at this. So Robinhood went public this week, right? With an IPO, and it's surging right now. So Robinhood is a trading app that's geared towards basically millennials, saying, hey, anybody can now go out there and trade stocks. You can use our app to trade free stocks, to buy options, to do all this stuff. But who do they target? They target young people, right? Typically people under 30 years old. Well, what if people under 30 years old and younger never experienced in their entire lives as adults a bear market? So all they've known their entire life as an adult is that when they buy a stock, it's going to go up. So they're all using this and doing all this stuff with this app. So this app is making all this money and going public. But what's going to happen when we do finally see this correction/crash and things come down? What about all those young people that have thought they can never lose money in the markets thanks to apps like Robinhood when they lose everything? What's going to happen then? I mean, it's just crushing the middle class. That should be the topic of today. Killing the middle class. It's crazy.
You're actually, I love that you brought that up. This is such a great topic. The average investor right now, the millennial, they don't even know a down market. Like, think about that. They might think they remember 2008, but they were too young. They don't remember what was really going on. They kind of think about it. And Brad and Nick, you got to chime in on this one too. But the average investor today doesn't even know a bear market. They don't even know the impact of a recession. And I can relate because I didn't know what a recession was until the planes hit the tower and we went into the .com crash, and I lost a ton there and I had to go to work. Luckily, that landed me in Wall Street. That's how I entered Wall Street. But Robinhood is out there, definitely targeting. It's almost like cigarette companies, like targeting teens. Like, listen, I look at it the same way. They're targeting millennials and they're getting them to put a ton of money. I mean, they just went public and billions of dollars are in there. But Robinhood doesn't have a platform that shows you a buy and sell signal. Like, here's where you buy and here's where you sell. Like, there's a platform called MetaStock that I love. It gives buy and sell signals, pretty accurate ones too, based on algorithms that hedge funds use. And, they've been around since, I think, 1985. But why isn't there more stuff out there like that gives people the ability not to just buy and put money in the market, but also tells them, hey, here's a sell signal. This is when you should probably sell and take your profits off the table. Why are advisors not telling their clients to sell? Well, it could be because, hey, it takes too much time to do that, or it takes money out of their pocket, or they put you into a platform like one of those bogus variable annuities that makes it really difficult to do these things. So this is a problem right now. And let me just read one comment, and then Brad and Nick, I want you guys to comment on this because this is a big one. Michael said, he said, what if they're doing it to get people to invest, knowing it will crash? That's a slick way to make money from people and delete it without them having any control. You don't think that that's happening? So if you really all want to piss yourself off or just learn the truth, just go to YouTube. Look at who's selling right now. Warren Buffett's got huge sell tickets in for lots of stuff. Sure, he's buying some pharma and some other things. Bill Gates selling a whole bunch. Mark Zuckerberg's selling massive portions of his portfolio. If these big guys are selling, the guy in The Big Short, Michael, he's completely bearish on the market. Every economist I follow is 100% bearish on the market, getting out, actually looking for an entry into the short position. So what Michael said is, are they propping the market up, building the market up, imploding and building this bubble up, including the government, because all this stimulus money is building this bubble in a point to get it so big that then one domino goes down and we don't know what that's going to be. It's going to be a war. Is it going to be, an attack? We don't know. Is it going to be COVID round 45? Because I think we're past COVID 30. I don't even know where the hell we're at. But when this whole thing goes down, this is what all of you Robin Hooders or professional investors out there need to understand. The market goes up relatively slow. Right now, it's going up pretty quick. But when it comes down, folks, it comes down so fast, you won't be able to catch it. You won't be able to react. And if you don't believe me, just look at last year when COVID came down. How many of you were able to react before you lost 10, 20, 30%? I bet you not many of you. How many of you called your advisor and your advisor said, oh my God, I already got you out. I saw this coming. And as soon as it tipped, we basically kind of got you out. That would be something that would be called fiduciary responsibility. But did they do that? How many of you actually got out then? Now, you might say, oh, well, that would have been stupid to get out because the market rallied. Yeah, but during that period of time, that would have been a really smart decision. If you lose 40%, you got to make 63% just to make back the 40 with the drawdown effect. All right, I'm done talking. What do you guys have to say on that?
Well, I think that you have two worlds colliding. I think you have a greedy set of advisors that are happy to entice people to walk into some of these different type of investments. And I see all these investments that are new, are not based on fundamentals. They're not real. They're quick. You have a culture that, when our parents grew up, it was a decade before they even had new furniture in the house. Okay. Now you want to move in, you got brand new furniture, plates, tiles, this, that, and the other. You got a brand new car in the driveway, maybe two. Maybe back in the day we shared a car. Remember that? Now, everybody's got a car. I mean, it's just NFTs and cryptocurrency and everything that's not based on fundamentals. It's just based on greed and or sizzle. There's no stake there. And that's the big problem is I see a lot of these asset classes that are coming out where the younger generation hasn't been taught fundamentals. They don't know fundamentals, but they do understand quick and easy. And when you put in $30,000 in crypto and it's worth $500,000, how do you talk against that behavior? It's so hard, right? It's just, this is what we're dealing with. I think that we almost need to have a correction just so that people can get spanked around a little bit and get a sense of realism of what really is out there so that the markets can kind of forgive themselves. And so that, the country's got to burn a little bit. Mm-hmm. And, after there's a fire, you get that new vegetation and things grow back better. But I think people are going to pay the price for their lack of vision. I feel like a Darth Vader type of pitch right there, but that's what it seems like.
Listen, I couldn't agree more.
I know Brad's got.
Yeah, I was just going to say as well, as a lot of people think like the stock market's the rich man game, but with the 401ks and everybody invested into it, like we mentioned before, it's the middle class. And so when it does take a correction, it's going to hurt everybody. It's just not.
It's the crap table for the wealthy. That's what people do not realize is that the stock market really is the crap table for the wealthy. I mean, a lot of wealthy people buy stocks directly, whereas like you said, your middle class, they're normally invested in these 401ks that are in mutual funds that are a little bit slower moving. But today, when you've got bots, that mechanical bot has bought and sold that stock 300 times before you've even pushed the button to click a sell.
You're darn right.
Like you're so far behind what's going on that unless you're a robot, you almost can't keep up with trading. I mean, it really is scary. It's a whole different world.
People need to learn a lot about, like you said, fundamentals. And I would recommend all investors out there, stop trading, liquidate your portfolios and read one book and then start trading again. And it's a book written by Benjamin Graham. Okay. It's called The Intelligent Investor. It should be mandatory. Robinhood should make that a mandatory read before you're ever even allowed to trade, because that would teach you what does Warren Buffett do? What does Benjamin Graham do to invest? Fundamentals, 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 folks. It's the best book for an investor. It's called The Intelligent Investor because there are a lot of stupid investors out there right now. I'm sorry. If you don't like what I just said, get off. You don't need to be on here. I told you we're going to rant, we're going to rave, and we're going to argue. And that's the point. If you can't handle the heat in the kitchen, get the F out. That's what I got to say about that.
Stupid investors are pushing the market. You're exactly right, guys. It's chaos.
And it's going to crash and burn. And, you know, I don't wish that upon anybody. I know a lot of people that are going to get hurt really bad when this happens. But unfortunately, people need to learn the hard way sometimes because, I mean, listen, like I'm big on TikTok, right? I've got a lot of stuff on TikTok. There is so much hate and so many know-it-alls on TikTok. I don't know who they are, but I'm telling you, I've never seen that level of experts in any one platform. Everybody's an expert. Oh, buy term, invest a different. It's the only way. Everybody is so opinionated that there's only one way to do things, and that's the way that they learn from their idiot that told them that, from the idiot that taught them that, from the idiot that taught them that. None of them read the damn book, Intelligent Investor. If they did, they wouldn't be saying that. They'd probably already be out. You know, it's just like the number one problem in this country when it comes to your money is simple. You are not in control of it because you have intentionally and happily just given control to everybody else. You've given your money away. You gave your money to Robinhood. You're putting your money in your 401ks. You're giving it to the banks because where's your money sitting? In the bank. Who's making money on that? The bank is, not you. Stupid. Learn to take back control of your money. Sorry, I went on a rant there.
Killing the middle class, Chris. Killing the middle class slowly but surely. I mean, inflation is going through the roof. The powers that be are admitting it right now. But guess what? I just scrolled every single financial and news headline on CNBC. Not a single headline about inflation. Why? Because inflation is simply a tax on the middle class, and it's a big one, and it's killing the middle class.
Let me go into a different topic. There's a lot of comments, and I want to, in the final end, I really want to spend it on some of the comments because some of these are really good. This one, Dennis said, it's better to be out of the market wishing you were in than it is wishing you were out. How true is that statement, folks? Anyone got a comment on that? How many of you during, you know, a market drop, if you had money in the market, wished you were out more so than when the market's going up, you wished you were in? I think that
people are making a small bump, right? The volatility is going back a couple hundred points, up a couple hundred. You're going to miss if you would just take your money and safe harbor it and let the country burn a little bit. I mean, I keep saying that, but we all know the country's going to correct. It's due anyways. It's in our culture that it's going to happen. Why not just take your money, take your gains, go on the side, let the markets, let the asset classes correct, then buy them at all-time lows. I mean, I don't think there's anything wrong with that because you're giving up a few points today for dozens and maybe, 40, 50% loss down the road. So.
Absolutely. Absolutely. So in kind of the final wrap up here, I mean, I think there's a lot of topics out there. There's a lot of things going on. You got Robinhood, we didn't even talk about Bitcoin, but Bitcoin's doing what we keep talking about. It's trading between a $30,000 and $40,000 range. It did break that 40,000 range recently and went up to, I believe, 42 or 43. And I was literally thinking, all right, well, we might go to the next level, which would be 50 or 60 based on the limited data we have. So but you got to really look back to that Intelligent Investor book. Why is it that Benjamin Graham and Warren Buffett absolutely and openly will not invest in Bitcoin or any crypto? There are no fundamentals. So if you are trading crypto, just understand you're trading something based on pure investor confidence. And there's really no market. I mean, what can you do with your Bitcoin? Can you buy a Tesla? Oh, not anymore because it was bad for the economy, bad for the environment. But now pretty soon you might be able to buy them again because it's a racket. But that just shows the insanity about what's going on in the markets. And it shows the craziness as to what's going on. Now, I'm not saying anything good, bad, or indifferent about Bitcoin. It's probably around for the long haul. Ethereum's probably around for the long haul. Dogecoin, you're just an idiot if you think that's sticking around, and any of these other shit coins. But it's okay if you're making money on them. Just always have a plan for investing. If you buy at a stated price that you have done research on. And if you're going to sell, make sure you know what your sell is. And when you get there, don't say, oh, it's going to keep going, I'm not going to sell. Just get out. follow some simple investing rules. Take some pointers from Warren Buffett, the greatest investor of all time. And not only is Warren Buffett the greatest investor of all time, you also have to give Warren a lot of credit because he keeps it really simple. Buy low, sell high, don't lose money. When others are greedy, be fearful. And when others are fearful, be greedy. When there's blood in the streets, that wasn't Buffett. But, he's got so many of these like little things that just really are so easy to follow, but nobody seems to follow them. Like, and when Warren does graduate and go on to a better place, we're all going to really have to remember what he left here. He's leaving a great gift for every investor. And it's right in his books. Read and learn. Don't just dive into things. Don't just jump in the deep end thinking it's all going to be okay, because there's probably jagged rocks right underneath that water that you thought was 30 feet deep. Be very careful. These markets are dangerous. They are filled with sharks that will eat your ass. And if you don't like water, there's lions everywhere ready to eat all the sheep. And if you're the sheep, well, you're going to get slaughtered. You're going to be lunch or dinner or maybe even breakfast. Who knows?
Chris, I used to, when I used to do a lot of presentations, I always get the crowd. I'd say, listen, I said, what is the number one way to make money? You buy low and you sell
high.
Low.
Oh.
Because you don't get greedy, because you don't wait for the hippie talk. You sell low, you have your exit strategy, and you make that profit and you get out, period. But everybody always said high, right? No. You have your exit strategy and you make money, period.
Yeah, I like that, man. And there's a book, The One Thing by Gary Keller, and he talks about focusing on that one thing. And he talks about the small things, the small steps, the small little things you got to focus on. We're always looking at the big picture, but we got to focus on the small picture. Sometimes the small picture can just be a small gain. Buy low and sell low. Make a small profit. You're never going to be upset when you make money. You're going to be really upset when you got greedy and you lose a whole bunch of money. You're like, oh, that was dumb. Hey, how many people do you know that bought Bitcoin at 60,000 thinking it was going to 120? How are they talking about Bitcoin every day like they used to over coffee? No, they're not talking about it at all. They're not saying that they were wrong because they can't admit that they made a mistake, but they still have hope. And that is a dangerous thing. Hope is a powerful thing, but right now the hope is based not on hope. It's based on FOMO. It's based on euphoria. Don't get caught in it, folks. You guys, and there's been a lot of comments on Instagram here, just about God and Jesus and all these things. Like, listen, whatever your religious beliefs are, that's great. Just every single day, be thankful for something that happens in your life. Be thankful for something that you have. I don't care if you don't have anything. Be thankful for what you have, because people like Howard and all the other successful people that have gone from nothing, when they had nothing, they were thankful for what they have. Today, they have anything that they want, and they're still thankful for the few things that they had in those hard times. And that is what shaped them and got them where they're at. Don't ever forget the hard times, and don't ever forget the small things. And along your journey, folks, bring people with you. Don't be greedy. Don't say, oh, I'm not going to tell people how I became a millionaire. Show the path. Show the way. If you've got something that other people can benefit, give. So in final closing here, let's just do final comments. So, we had two guests and, it was super fun, Brad and Nick. So gentlemen, thank you so much for coming on and have a good day. Steven, anything you want to say in closing?
No, always a fun time. What the F happened? Can't wait for next week.
Absolutely. All right, folks. Thanks, everybody. We'll see you on the next one.